Hey, what's up you guys? This is Junior Trader, and in this video, welcome to the late night analysis on the S&P 500 and Nasdaq, that is QQQ, and we'll take a look at tech stocks as well here, that is Microsoft, Apple, Meta, Netflix, Google, and Amazon. Now, I want to start off with SPY here, S&P 500 first today, and the very first thing I want to show you is the structure. Structure on SPY continues to remain bullish, but what I always suggest, take partial profits. Like this is where we technically turned the structure bullish, but we were already becoming bullish above this red line. At least there was no worry for me once we got above this red line. Behind this is my significant level marked by my indicator. Because once we got above it, we were out of the danger of forming any potential head and shoulder here, right? On a bigger horizon. And then eventually, finally, structure changed bullish over here. And we have been continuing up again. And we are technically still bullish. But since we are reacting at the all-time highs, take partial profits, right? And because once the structure would break, it would break, right? So we are technically, we can go through some cool-offs, okay? And those areas is what I want to talk about is, if anytime SPY starts to lose 555 area zone, just give it this zone, okay? Let me actually put this on as well here with this box. If we anytime start to lose this box, that's where we will get more cool off, and that cool off will and may potentially come down to this level of 547 and 97 cents with 20 and 50 days moving average. All right, until then technically that will just constitute a deeper pullback, but yes, structure will become weak just going below 555, and then we'll have to see what happens at this level 547 or close to 20 and 50 days moving average. All right, I'm going to get rid of that box right now. Down there we don't need that box anymore, so I'm just going to keep this box up here. Let's also take a look at hourly interval. What are we seeing? So market last hour sold off out of nowhere, right? And again, this is pretty much the level, guys. If we can maintain above this blue box, we are still fine. If we break below it, we going lower. All right, just keep this in mind. This is the zone. This is the time to take partial profits in those long-term positions, right? As for intraday, it's a little bit tricky tomorrow across many stocks. Actually, I'll talk about that, but intraday is a bit tricky. But I would say this is where this is the zone, right? So if we can somehow get above 559 intraday, you can expect upside, but I would not bet more. Like 561 is fine, but that would be it. This is the range you are dealing with on S&P 500 tomorrow for the upside. If we start to go down, we are definitely testing this blue box, and if we lose this blue box, then the downside one, then we are breaking lower to the down low levels like 20 and 50 days moving average. That's the direction we'll open up the doors to. All right, so that's with S&P 500. Let's take a look at now Nasdaq. Now Nasdaq structure has been turning, oops, sorry, not that. Nasdaq structure has been turning weaker already. So, the reason the way we had this good bearish structure down here, that was great. We lost definitely a structure, and we also lost 20 days moving average. Right now the thing is that it's a sandwich zone because 50 is above 20 days moving average, all right, and 20 is still coming from underneath, and that's why I'm just being a little bit careful here on the downside. And big markets technically, when they're in the sandwich zone, I don't really like shorting them. So because until here, I will just constitute it as a deeper pullback though, right, until 20 days moving average. Let's go to the hourly interval. Let's see for intraday what are the levels to watch tomorrow. So with QQ, the thing is that this zone, guys, up here, 473 and 88 cents. Since it couldn't close above it today, we fell below it again. And in the morning, when it went up, you can see the pullback got bought back up right at that level, right? So, but then later it fell. So the first time it worked. The second time, usually the test, if it fails, that means it has failed, right? So tomorrow, this is a level of resistance intraday, 473 and 83 cents. If we stay below it, just a downside play, all right, for QQQ. Microsoft. So let's go to the daily interval. And so with Microsoft though, guys, we already changed the structure weaker a couple of days ago, actually. Here you go, right? This is where we already became red, and then we have been just continuing lower. Rebounds are being shorted. Nvidia a little bit messed up things yesterday in its earnings, like when it had its earnings below 200 days moving average, but then Microsoft opened up higher than that. However, it gave up, right, eventually. So, but what to look for intraday, right? Now, the way it went up and then gave up just for the whole rest of the day is where the problem is, right? So, the thing is that with this one, it's still anyone's game. What I mean by that, there's a potential of inverted head and shoulder, but I'm aware about this huge supply zone right now. If tomorrow we lose 411 and 90 cents, definitely you are expecting weaker downside on this. And also I would say use that 200 days moving average on the daily interval. If anytime we lose this 410, 200 days moving average, it's an again downside thing. If we can hold above it, sure, that's still fine. So this is the line for you on Microsoft still, guys. Okay, 410. Apple continues to stay bullish, and Apple had its, again, I'm not going to cover event or whatever that the event that they had, but the price action is still bullish. Yes, we did cool off, but sold off, but price action is still bullish. That's something I have already been talking about over here for that. As long as we still stay above 227, it's still in the bullish price action. If we lose 227, then we have a problem, right? So that's that. Meta. So Meta also turned bearish well, at least the structure became weaker red couple of days ago, right over here, right? And it's still rebounds are being, sold off to the upside, right? You can see this is where it, that made the high today. This is the level you are watching, 508 and 23 and 49 cents for tomorrow. If we stay below it, we are technically still downtrending, and this is the area. Only close above this will start to give it some more strength. Otherwise, as if we lose 515, you are watching 50 days moving average on Meta. On hourly interval, it also rejected underneath of 200 hours moving average today. Right, precisely, slowed down, rebounded, good rebound, slowed down though there, and then fell again below this distribution level, right? So this is still a resistance, strong one. All right, that's Meta. Let's take a look at Netflix. So Netflix is still maintaining bullish structure, guys. All right, this thing is still holding itself strong. So if I go over here, this thing is still holding strong. Still in the complete bullish structure, just going sideways. This is not even a bearish structure. This is technically a bull flag, you can argue that, and yeah, this thing is still strong, guys. This thing is still strong, and I gave you the blue box down here. As long as we continue to stay above it, we are still just fine, right? And yeah, we are still just fine. So that's pretty much what you are watching with Netflix. All right. Google had a break of neck, leg, everything. We became red yesterday, and today we are just seeing today again bearish. We lost the level 164, right? That's where the problem is. So yes, structure is back again weaker on this one, and right now I'm not seeing signs of upside on this. So let's see if we are coming down to 200 days moving average again. I'm structure is not showing me any upside right now on Google. Taking a look at hourly interval, if we continue to stay below 20 hours moving average, intraday as well, it's just a weaker play to the downside. Any rebound until 163 and 98 cent is also a weaker rebound. What I want to see is if it gets above 20 hours moving average, I want to see if it closes closer to 163 and 98 cents. If it closes strong over here, then the day after, if we do breakout, we can continue higher. Otherwise, if we still stay weak here, keep rejecting 20 hours moving average, or even if we go up there but sell off again, it's still weak because the structure has broken right up over here from here, 164. That's the thing. Amazon. So let's go to the daily interval, and Amazon, I gave you this another blue box, and we'll talk about this on hourly interval as well in just a second. But this thing came out and above 200 days moving average, but is still selling off. Structure on Amazon also turned red a couple of days ago right over here, and you can see we have been just going lower. If you need access to my tools, links are in the description below of this video. Now, so being red and going down, if we stay below 200 days moving average, we can go lower. But let's go to the hourly interval. That's where some precise levels are, because I gave you this blue box for a reason as well. And that is the potential of this at this point, if it can become an inverted head and shoulder. We did gap up today above one of the levels of the bottom of the blue box. Above that did go higher, but now it's all about, and it's still holding that level, guys, 171 and 45 cents. If it can continue to stay above it, continue to stay above 20 hours moving average, it can a little bit continue higher, maybe, you know, test 200 hours moving average again, or this higher level intraday. But again, it's going to be only a rebound. Overall structure I showed you is still bearish. And if any time we lose 171 and 41 cents on a strong break, then we have a problem. Then we have a problem of going lower, right? Much lower, right? So just keep that in mind, okay? So that's your Amazon. All right, guys. Well, that's it for this video. If you found it helpful, valuable, please hit the like, subscribe, and I'll see you in my next videos. Take care, guys. Bye.